guys, I'm back, and this is Andy Harrell here from his place in Spain, and just thought I'd give you all an update as to what's been going on with me. The big question is that is on everyone's lips at the moment is, should you be buying, selling, holding Bitcoin, or could you just do this and get 228% return on your investment? Seemingly endless, guys, as I record this on the 18th of November 2020. It appears that the surge in Bitcoin looks unstoppable. But anyone used to the market's volatility will understand that a correction could be coming soon, and when it does, it could be as much as 30% or so, which could see Bitcoin drop from its current price of just around $18,000 to 12,500, something like that. That's a possibility. So timing your exit strategy is something that is key to this, a problem that all of us holding Bitcoin would like to know the answer to. If you don't hold Bitcoin, then you should be watching this too, because this is right up your street. Anyway, have a look at this. It's all to do with something called yield nodes. When I sold my rental property I've had for about 20 years this year, I had an amount of capital that I wanted to try and invest somewhere that was going to give me a reasonable return instead of the 5% a year I was getting on the rental income. So this is why I was attracted to yield nodes, and anyone that knows me will appreciate that I do a lot of due diligence and investigation and background checks before I get involved in anything. Having had my fingers burnt in the past, I didn't want it to happen again. I looked at the cryptocurrency world and realised the potential here is absolutely massive. If you're new to digital currency, then all this could look like a bit of a steep learning curve for you, but I'll try and keep this as simple as I possibly can. Because for years now I've been getting emails from various different places to buy Bitcoin, and to be honest, I had no idea what Bitcoin was all about until now. Because the world of finance has always depended on a stable currency by which exchanges of things of net worth are made. But this year has seen the world of fiat currency, which is like dollars and euros and British pounds, etc., go into meltdown as governments around the world print money to pay for the problems associated with this pandemic. This has caused massive pressure on the whole system to cope with record low and even negative interest rates, driving up more borrowing and more debt. Now even the bond markets, which are loans from government sources promising a fixed return for new institutions and private investors, have also reached zero returns. In the past, of course, gold has always been a safe haven for people who think that the fiat currency pressure is too great and they go into gold. Well, with gold ranging between $1,500 an ounce and about $1,900 an ounce. So this is where Bitcoin steps in. And the main reason is for the massive growth in Bitcoin is the supply of coins, which is limited to 21 million. So just try and get your head around this. Can you imagine how much $1 would be worth if there was only 21 million of these things available? Now, this excludes euros, pounds, Swiss franc, etc., etc. I can tell you that if $1 only had 21 million in it and available, it would be worth a lot. This is what's happening to Bitcoin right now, because the digital currency is the answer to all the world's financial problems of oversupply of traditional fiat currency. And this is, my friends, where we are seeing right now this unbelievably insane rise in Bitcoin. But there's a problem. What goes up will usually have corrections along the way and it will come back down again. So what if there was a way of locking in the profit that you may have made on Bitcoin or want to make on Bitcoin by hedging a position to ensure a fantastic return without the risk of the inevitable correction and loss of value of the investment in your currency, assuming it's Bitcoin, or maybe you're in Ethereum or Litecoin or one of the other ones. It doesn't make any difference. But in order to ensure that that currency remains valuable, you need to get a yield or a return from that currency on a stable basis rather than the huge fluctuations that are likely in the stock market or the Bitcoin market. This is a very, very much more secure system, Bitcoin. It's all connected on something called a blockchain. Unlike a centralized system like in your bank, multiple terminals within the blockchain technology all connect together in order to ensure security. What are you going to do? You're going to hold it, you're going to buy it, you're going to sell it, or you could do this and enter it into something called yield nodes. To better understand and appreciate the security of the decentralization blockchain system of how Bitcoin is produced and worked with, we need to understand a little bit about blockchain, because as far as is reasonably possible, unlike ordinary deposits in a bank, it's safe. The mining or production of digital Bitcoin is an expensive and electric-hungry process, so miners get rewarded well for doing this work. It's not as profitable as it used to be, but it is still profitable. However, when we come to yield nodes, the huge returns and the revenue that's generated is through a combination of what they call master noding, price gains and services that work in union with the world of digital cryptocurrency. So what the hell is a master node, I'm hearing you say? Simply put, a master node is a server on a decentralized network of a huge and incredible computing power machines. It's used to complete unique functions in a way that ordinary nodes can't do. And it can be used for features like direct send or instant transactions, private transactions. But because of their incredible capabilities, master nodes typically require a huge investment in order to run. But this is where incentivization comes into play. Master node operators are rewarded by earning portions of blockchain rewards in whatever given cryptocurrency they're facilitating. Some cryptocurrencies pay out rewards to master node operators multiple times a day, whereas other projects pay out operators on a daily basis. The benefit of this dynamic is that the operators can still earn money and provide a service to the network without having to invest in the expensive cryptocurrency mining equipment. An authorized operation will need to lock away a large number of coins and set up a server through which these holdings can generate really impressive returns. Since inception, yield nodes has not only grown considerably, but has also encompassed other areas to stabilize and leverage the revenue. These include its own listed crypto coin, its own decentralized exchange, and crypto shopping facility. Started as a side project in 2018, YIELDNODES entered an extensive beta phase with a group of hand-picked adopters at the end of 2019. Over the next 12 months, the testers in live operation generated a return of 127.8%, which is well over 200% if you compound those over a monthly basis. And that was all despite the downturn with the coronavirus. So let's look at how we can achieve this phenomenal return. And let me say first and foremost just how brilliant the guys that operate this are, who do this masternode operation. I'm very excited. I've been watching a huge growth in investment opportunities ever since I sold my property. I was actually I was so impressed with what happened in the first month of my investments, and the way that the people that run the operation communicate freely with everyone that's involved. You've only got to drop them an email and they'll come back to you with an answer. You can also get their phone number, you can look them up on LinkedIn, you can talk to them if you need to, and it's not a problem for these guys. And they're trying to keep their operation, relatively tight, so they're not inviting a huge number of investors, but they are obviously going to be able to generate income from these investments, for which they have a 15% commission. In other words, all the income that is generated from their operation will derive an 85% return to the investor and a 15% return to the guys that are operating it. And I, for one, am delighted about that. I think it's a brilliant split. And if things carry on the way they are, you can forget about having to invest in anything else, because as long as you've got a bit in here, it's going to grow exponentially and become a huge amount of money over time. The minimum deposit into YIELDNODES is €500, or the equivalent of €500 in Bitcoin. If you only invested, say, €500 into YIELDNODES over, let's say, a 5-year period, an average of, say, 10% a month, then the total return after 5 years would be €25,000. So, I mean, that is a return that you can only dream about, other than in some unbelievably adventurous scheme. So that's pretty much worth getting your attention. So your fund goes into setting up the master node. A master node, like any other full node, is a node server within the blockchain network. The full nodes are important because they process transactions and store them on the blockchain. But a master node operator has rights beyond those of normal full node operators and is required to manage critical tasks, bringing the operator higher rewards. So 13.5% profit in October and 2.2% for the first week in November. If you multiply that up, you're getting up to around 9% or so for November. I was always taught that if something looks too good to be true, it probably is, but I've done due diligence with this, believe me. I've done all the background checks, I've done all the searches, I've looked at the interviews with the people that are involved in this operation. Very happy with the communication. I've sent emails and had lots of replies. They help you every step of the way if there's any issues whatsoever. So I've had no problem. I was a bit scared in my initial investment because I thought that I'd have to use a card. Now, they don't charge card fees themselves, but they just pass the card fees on to the investor. But if you invest with Bitcoin, it's free. So that doesn't cost you anything. So all you need to do is to go to somewhere like crypto.com. There's a link below, and as well as the link to YIELDNODES below. And if you use my link, then I do get a small commission on the investment that you make. And if you use crypto.com, the fees are very low. At the moment it's 1.49% for the fees at the time of recording this for using a card, which is great. So you buy your crypto on crypto.com, and then you transfer it over to